The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
Man, I just barely hear that at all, if at all. You needed the volume up much better on that. Anyway, what do we have going on here today? Well, we're up 39 points in the S&P cash. I've been buying this week, and all my positions are looking good. Looking good. Added another position today in the Tech Insider. I think we got, what, 3 or 4 in the daily newsletter. Suspect that we're going to get back up to somewhere around 2,700, 2,750, something like that in this next run higher. And we'll go through the charts, and I'll show you why I suspect that that is the case. Now, will it happen in a day? I thought we had a big chance, and in fact, I was doing a little day trading last day or so. Ended up in a lot of calls for expiration today in the SPYs. I don't know. I kept on saying the ES, but I was actually playing the SPYs. Anyway, I laddered in, and basically at 2640 on the S&P cash. That was basically, I covered some of, I sold some of them earlier. So basically, I've got a bunch of paid-for calls for the end of the day. I'll make a little bit of money and go out and maybe have a really nice dinner or something. If it closes around here, if we get another 20 points or 30 points, I'm going to make a boatload. So I am more than willing to sit on my hands for the rest of the day and watch this occur. But it just looked to me like far too many people were far too out on the end of the diving board, and there was no water in the pool, i.e. they just wasn't going to be able to push this market down very much further. I thought we might even see 2,700 by either the close today or Monday in the open, and maybe we get a nice gap up in the morning on Monday. But everything, all the conditions are right. You never know when you're going to get that huge bounce, but you kind of know when the risk reward is kind of there. And I kind of think about it as watching the end of the Daytona 500, and that is that the guy that goes across the first is worth about $15 million more over the next year. The guy that comes in second, he's only worth about $1.5 million more. The risk reward to go for it all at 10 to 1, or almost 10 to 1, or a little more than 10 to 1, is pretty good. Now, when you talk to those guys, you kind of want to be second or third as you're coming around to the last turn 4, NASCAR turn 4. And that way you can pull out from the guy in front of you, and you pretty much can pass him. There's not a whole lot he can do. You don't want to be first. But you have to put yourself in that position of being around the top few. And it's hard if you're first to like give it up and not go all the way to the back. So the whole thing is a lot of game theory, a lot of other stuff going on. And you know what? You just have to put yourself in these positions like today. You just have to put yourself in the position to win. And if you do, it's great. If you don't see a lot of them, sometimes they fight, I think, after the races, but for the most part, unless they do something dirty, they just accept that that's the way that the things turn. And if you can have a little or no risk trade going into a day like this, when most people have already left, that's a pretty good thing. We talked about volumes yesterday. I will add to that a little bit more today, and my theory on what is happening. It wasn't wasn't a lot of silent volume as I thought. There is something that has drastically changed, and we'll talk about that in the overall markets. And it may make some difference, but I have a feeling that it will be more like something than less like something in the past. Anyway, up at 2647.5 on the S&P, 345, 141 on the NASDAQ. Russell's up 22. So could we see a plus 500 day on the Dow 30? That's kind of what I was looking for, maybe 500 or 600 points by the end of the day as we do it. Now, what has happened that's a little different than most days, and that is the bond market closed at 2 o'clock. So any trading we do here is not going to be backed up by any move in the bonds. And then, of course, we have to look at the rest of what's going on out here. The dollar index is about flat at 72 for the June 18 DXM 8 dollar index. So we're kind of flat on that. We've got a little bit of juice probably coming into the oil market. It's up 78 cents, only because we've started to see at least 1 week where the Baker Hughes numbers were down. Actually, internationally, in Canada and the United States, they were all down. That will add just a little bit of support to those oil numbers, not a whole lot, but not when they're going into this weekend. They're not really going into gold. It's off $2.40. They're going into crude as the place to park your cash for this weekend. So, yeah, they may be creeping higher. I don't see a lot happening here in the last 2 hours with the bond market closed and gold. If you're looking for a pop, I suggest that you probably start looking Sunday night and maybe get some sleep on Sunday so you can spend Sunday night up a little bit, because I don't think you're going to get it here today. What else do we have? Silver's up just shy of a nickel. Copper's up 2.5 cents, just over that $3 mark. So commodities, which I think we're going to have Andy Heck in the 4 o'clock hour today, taking care of that. So he won't be here around for the 5 o'clock hour. So make sure to turn in 1 hour earlier. Tune in 1 hour earlier. And what else do we got going on here? Well, just a lot of stuff. Well, see if there's anything else I wanted to look at quickly or talk about. Probably the biggest thing I was looking at yesterday and today, NVIDIA looked like it was ready for a fairly large bounce, and I figured that that would put enough wood in the fire to get this market headed back up higher. We're at 233. We were at 220 lower today, and 217 yesterday. They talked about none of their equipment wasn't in that Uber car, and I think that was enough to get a little people away from it. That stuff is still years away. NVIDIA, if you're trading it, I wouldn't trade it on the promise of self-driving cars. I would sell it on the, or I would buy it or own it on the promise that they continue to make the best video cards and best cards for machine learning, and no one else has really started to challenge them. Almost a monopoly in that business. I think business. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back, and let's do a little bit of history.
Then it's all just a little bit of history repeating.
Anyway, what do we got going on today? Oh, yeah. 1951, one of the most sensational trials in American history. Julius and Ethel Rosenberg are convicted of espionage for their role in passing atomic secrets to the Soviets during and after World War II. The husband and wife were later sentenced to death and were executed in Old Sparky in 1953. This is kind of a very interesting case because when they decided to prosecute him, the defense demanded that they show everything that these guys gave the Ruskies. And because of that, it's all in the public domain. It's not hard to build an atomic bomb. It is hard to get the fissionable material to put in one. And basically, they didn't go after him about the fissionable material. They went after him about the design of the bomb, so they could give up some things that were actually fairly easy to guess. But I looked through them, and pretty amazingly, you can see how to build one. And one of the guys, I'm trying to remember what it was, he was a truck driver a couple of years ago who, in his spare time when he wasn't driving across the country, would build a duplicate of this atomic bomb. He had a bunch of people from the government visit him because, of course, they're from the government and they're to help. They asked him to actually change a couple of the design issues because he got them right. They're actually wrong. And I think everybody knows that they're wrong in the documents, the court documents. But if you ever wanted to know how to build an atomic bomb, all you got to do is go dig into the records of this case. You basically get them all. Won't do you any good because you still have to need the fissionable material. But at least if you know how to build one, It would be interesting. I might build one day. Always thought it would be interesting. On this day in 1951. Old Sparky. Okay, so what do we have going on today? Well, like I said, the last couple of days, even this morning, when everybody gets so sour in the market, and I think it happens faster now because of social media and CNBC and Fox Business News and Bloomberg. Everybody gets pretty nasty fairly quick, kind of that sour part in their stomach. And we're going to go through some of the charts that are moving out here. Let's take a quick look at NVDA. The thing is that this isn't 2000. We do have some companies that literally make no money. We've got some car companies like Tesla, which we'll get into in a moment, that burn money. NVIDIA is not one of those companies. If you just looked at this chart, this thing gapped down. It's got a nice gap here right around there. It got to 217 yesterday. Just went through the bottom of that, but closed back in the center. It's back up into its range now. Was the energy off this high that much more than the energy off the February 6th low? The answer is no. It kind of happened all in one day. It was on the stories, of course, that all of this stuff had to do something with NVIDIA's profits in the next 3 years, which it does not. Nobody's building any kind of car that's going to be on the road in the next 3 years that drives itself unless it's in Death Race 2000. Oh, what a great movie. How many people ever saw that? Death Race 2000. I'm talking about the original one, not the horrible remake. I'm talking about the horrible, very horrible original one that had David Carradine in it. You remember that movie? They said they put old folks out in the street and you had to run them down for points. It's like a bad video game. But anyway, bad movie. But that's what it would be. And one of the interesting things I saw in people dissecting both the bridge collapse and the car, the self-driving car hitting the guy wheeling the bicycle across the street, was just, especially when you're getting going, you don't know the questions to ask when you're doing something new. The bridge collapse down there in Miami, was it south of Miami, at the college, was a brand new design. No one had ever tried it before. And they didn't quite know what to do, and they didn't tell the people that were working on that bridge span what to do, and they let people drive under it while they were working. So literally a cornucopia of bad ideas. But when you're doing something new, you don't know the questions to ask. NVIDIA was fairly interesting. But Intel was actually the electronics in that car, but they were turned off. Volvo also had technology in the car that would have slowed the car to 10 miles an hour before it hit it. Intel actually took the dash cam video that was old and grainy and actually off of YouTube. In fact, found out that their technology would have slowed the car down to only about 15 miles an hour when it hit the guy if it was on. So not sure exactly whose technology was in that Uber's car, but it wasn't any of these guys. And the second thing is, it doesn't have anything to do with the profits for at least 3 to 5 years down the line. It's going to take a long time. How many things do they still discover in airplanes these days that they didn't think about right off the top? And, you know, we're basically like flying in planes in 1950. These things have a lot of problems. Everybody talks about all the hours that they have driving these things around. Nothing is foolproof to a sufficiently talented fool, and you should always think about that. These guys are going to do something. Apparently, the guy that they had driving this car was a ding-a-ling anyway. So I don't know. I guess it's just a warm body to sit in it while it drives around. But NVIDIA, I don't see any reason, other than the price it sells at, the PE. But nothing changed in this. Nothing changed in a lot of other stocks over the last few weeks. What we had was some stocks that were wildly overpriced. We talked about that back in January. They are now coming back in line. If someone's willing to take a stock and hold it into a 3-day weekend, you got to figure that they've got at least some level of confidence of sitting on it. And in a week where we went down and didn't see people puke these shares up going into the end of the 3-day weekend, generally pretty good. When we come back, we're going to talk about the change in volume that I was talking about yesterday and what that has to do with the market going forward. But it's interesting. Give me a call at 877-927-6648. Email me at path@tfnn.com. And, of course, put a message in the den.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And yesterday, I was looking at the volumes and looking at the floor traded volumes of the NYSE. We ended up with about I think it was about 8 billion shares yesterday in the total market. About what was that? About 4 billion of them in stocks that are listed on the NYSE. But what we are now seeing is just a out and out route of the floor traded volume not being traded at the New York Stock Exchange. It's all being traded electronically and not through the NYSE, which means they're going through ECNs. Right now we have about 1.7 billion shares on the NYSE consolidated tape. Tape A shows, 1.8 billion shares. So that's about correct. But what you have is just the rest of the market that isn't there, and it is just huge. So I think we ended up with like 2.2 billion on the NYSE consolidated tape. We're getting far less now than let me pop this up here so you can all see it. I've switched to looking at this CBO website for the volumes. It basically has tape A, B, and C. You can dig a little into it, but basically you've got the NASDAQ and everything else. That's basically what the Amex, where most of the ECNs and ETNs trade, along with some other stocks. And then you've got tape A, and then you got tape B. And tape B and C is basically all the other stuff. So when you look at it, it's the total right now, or in all the markets and all the places in the world where you could conceivably trade, we're just a little over 4 billion shares on the day. Again, I said we were, what, 8 billion or so yesterday. And the whole point of this is to figure out, is the volume significant anymore for the NYSE floor traded stocks? And I'm going to say no. From now on, if you hear me say anything, it's all going to be about the consolidated volume off the CBOE website, where they break everything down into every conceivable different feed and where it's being traded at. And you can see them all. There's some literature down at the bottom that tells you how to break it all out. Each day in my newsletter, I do publish a breakout in the of all of those for the last 5 days. In fact, I probably ought to show that right now. Okay. Let's pop that up. Come on, move over here. Come on, little doggy. Get over there. Okay. And I break it down into the NYSE, the AMX, the NASDAQ, and the dollars and the share amounts both, so I can look back at it. But basically looking at the last 20 days of volume so I can follow it and get an idea. So I know exactly what it is. So we had, 8.2 billion shares yesterday. We've gone to some pretty high levels from seeing about 5-6 billion being a big day last year. So the volume has come in both in the upside and the downside. But you need about 10 billion shares now to really hit some fairly high volume. 8.2 billion yesterday was pretty good. So 7.7 billions the day before. What I guess I'm going to point out is it wasn't the dark pool volume yesterday. It was the fact that we are now seeing less than 50% of New York listed stocks actually trade on the NYSE. It has become, I think, maybe the tipping point of the end of the NYSE having anybody on the floor other than for, what is it, CNBC and their little dog and pony show. There's nothing really happening, kind of like the NASDAQ trading site where literally nothing happens. These are just dog and pony shows for cable financial news these days. But that does mean that you're probably not going to have any humans standing around to stand in the way of the market when everything goes belly up. We've lived through the flash crash. We've seen some more of those fat finger trades, breakdowns of some of it. At some point, we had a human backing up the computer systems. But my guess is that we've seen the tipping point for the NYSE And human trading of any kind, probably gone in a year or two. I wonder if the building just sits there or if they sell it. My guess is it'll just sit there and they'll continue the kabuki theater that is the NYSE when almost everything is traded across the river. But that would be interesting. Anyway, okay. Okay. Oh, we had a question about Amazon and why all the pot shots at Amazon now. And I think it's just that with all the other folks getting a little bit of road dirt and debris on themselves, like Facebook and the others, probably a good time for Trump to pile on some of these others. For all I know, he's now long all these stocks after he yelled about them. Amazon is, if Microsoft was guilty in 2000 of being an antitrust purveyor, Amazon's at least 5 times more guilty than Microsoft was. Amazon literally has done everything in the book, from going vertical, from delivery to manufacture. There's a lot of antitrust laws about how you develop and send and put out goods, especially white goods. One of the things you probably won't see a great deal that Amazon's selling, and that is the washers and dryers, those kind of things. There are a lot of laws into antitrust that are specifically against those folks because people would build them and go out of business the next week. And it left a lot of people without parts and service. So from automotive dealerships, a lot of these laws got constructed because in the early days, there were a lot of fly-by-night folks. At least some, if not a lot of those white good laws can probably be put on Amazon. And of course, Jeff Bezos, I call him Citizen Kane Bezos, has bought his newspaper and gone after the guy that actually calls the shots. He hasn't been able to kill them, I'm going to say politically yet. But my guess is its turnabout is fair play. But it's not like Amazon is not guilty. There, especially the vertical stuff, taking over deliveries, taking over manufacturing of parts. You're generally allowed to do one of the 3 and maybe 2 of the 3, but not 3 of the 3 parts of a vertical market. They're incredibly guilty. I've warned about this for a year. You just never know when that case is going to be filed. But we'll talk about that when Microsoft got it and what happened to its stock when it did happen. We'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks! Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And anyway, I was looking at Microsoft's. Let's take a quick look at their chart while we're talking about them. Microsoft's move out here today, and it's back in the 90s. They were hit, and I remember the day because it was like the stock dropped 30% in one day when they got their notice that it was either they were getting sued or the day that you lost the case. I can't remember which one. I tried to look it up during the break, but they used to have a great website on it, and I don't find it anymore. Yeah, it takes a long time for these things to kind of grow in government. But if Microsoft was guilty, Amazon's 10 times more guilty. So I would not be surprised if the government easily prevails in a case over Amazon because there's prior acts, kind of like Facebook. Facebook's got some real problems, and that if they continue or if they do anything again, they've already violated their consent decree from 2010, and they've already been notified of that by the Federal Trade Commission. But now, if they do it again, that will be problematic. And Amazon's already done things like fix the prices of books, do other things like that. So Amazon's going to have a tough road going ahead. They'll be able to prove prior bad acts by Bezos and his gang. As I say, Citizen Kane Bezos. If you've not ever seen Citizen Kane, it's well worth the watch, by the way. Okay, so let's go ahead and get into some of the other charts out here today, although I think I got a question. Do I think it's the bottom for the markets or specific markets or just for the individual stocks? Well, I don't think it's for every sector. I think maybe 7/8 of the sectors show that they've made some kind of bottom. I'm not going to predict that we're going back up to the highs and past them. I'm only right now thinking that we can easily see a path to 2,700 to 2,750. And my thoughts are that this looks very much like, can't remember, I tried to look for it, I didn't have time. I had a giant short where I made an absolute killing. And strangely enough, I can't remember it. I can remember the dates, though. It was either like 2011 or 2012. And the market kind of had a problem like it did now, kind of started to recover in March, continued to go up all the way to April 29th in the S&P, because I can remember that day because I shorted the living daylights out of everything, and it just got killed for the next 2 weeks. Maybe someone can find it. Was it 2010? Okay, it's 2010. Time flies while you're having fun. I thought it was a couple years later. Anyway, maybe that's why I didn't find it. But I can just remember the dates because I was looking at it, and basically he had a kind of a setup like this. So could we just go all the way up through probably the end of April? I think one of the things that never convinced me that we had some kind of blowout coming to the lower side of the market was a great deal of the options, which they continued to sell puts very hard this entire week, which generally gives you an indication that the option market makers don't think that those puts will pay out. They're probably the best traders, and I look at options of fairly hard to give me kind of an indication of where the market makers think they're going. They tend to be right about 85% of the time, and that's kind of a hard thing to do. They also are generally the best traders that you will find on all of Wall Street because there is literally so much money to be made. It is like printing money if you can do it right and stay out of it when you're wrong. But a handful of reasons. Now, I think that the SMHs are probably the weakest sector in a bounce. They will probably see more sellers. I think some of these internet companies, minus Amazon, can do okay. But basically, you got a couple of the FANG stocks that are put a gun in their pocket and pulled the trigger and shot themselves in the groin. Amazon is probably that, and that is with the antitrust stuff. They continue to heap on like there's no tomorrow. Facebook, of course, for being who they are. Twitter acting badly. You know, it's just hard for me to see these guys recover almost instantly. Can they go higher? The answer is yes. My guess is that a lot of that money rolls out of those FANG stocks and into a lot of other stocks. In fact, I added one today in the Tech Insider that's probably, it is the strongest sector in technology, but it's not all the names you normally hear. In fact, my guess is that if I told you the stock name, not 1 in 1,000 traders would have heard it before today. And that's it, kind of looking for little nuggets out there that no one else is talking about. And then when everybody's talking about them, I'll be selling them to those people talking about them. Okay. Dudette says she did the same trade as I did. All I remember, can it have been 2010? Man, time flies. Okay, so let's start looking at some of these other ones. No, not all of them are. Other than IA for options, which I have expire at the end of the day in the index, which, it's starting to pay off for me. I've got, what, an hour and 15 minutes left to go. So, maybe a great weekend for old Dave here. Everything above 2640 on the S&P cash has me making some big wood, the way I set this all up and the ladders. So we shall see. What else do we have going on here? Look at it. I guess we better get to charts. I'll never get to them if I don't. But one of the reasons I wanted to show you that we were having a bottom in the market is just how we are getting, just like when I was telling everybody that a lot of those big names had legs going higher to testing the high on lighter volume. We now have a lot of other stocks testing lows, and that leg on the right-hand side is being tested on lighter volume. Acadia Pharmaceuticals, ACAD, March 2nd, $22.35, 3.8 million shares. So what do we get? 2.6 million, or 2.3 million shares, excuse me. So almost 50%. And of course, the energy off this March 13th high came back with about 25% less energy. So winner, chicken dinner. A valid buy signal on a lot of these stocks. Some will do better than others. Some of them aren't quite as good, but still had very light volumes. Advanced Energy Technologies, AEIS, $61.97. Yesterday, $61.47, closed back below the low. Now it's back higher, but 327,000 shares to 720,000 shares. ALB, which this thing's been falling apart on Tesla and the rest of the electric car generation. Man, I'm not going to get enough time to get all these stocks in here. I could do 100 of these today and show you these things coming back. Albemarle, I can't ever pronounce this stock. ALB, $90.59 with 5.7 million shares yesterday. Below that, closed back above it with 2.9 million shares.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we have Tom O'Brien in the next hour, Andy Heck in the 4 o'clock hour. So it'll be an early day here at TFNN, but you're going to get both Tom and Andy today. Andy just a little bit earlier in that 4 o'clock hour today. So we'll hear what he has to say. Anyway, looking at some other stuff, got some questions. Why don't we try to get through a couple more of these stocks? But like I said, I mean, it's just going to be hard to go through. I could get 200 or 300 of these stocks that had tested previous lows, not on just light volume, not just on 10%, but on half the volume. Briggs & Stratton tested its February 9th low of 2116 with 646,000 shares, with 206,000 shares a couple days ago. That was March 26th with 206,000 shares. Got down to 2080s, closed back in the trading range and stuff. So interesting. What else do we have out here? Charter. This thing has been kind of a dog. It's come all the way down to support. that support had 3.5 million shares on the October 27th, 2017 low. 3.5 million shares. And what do we got here? The best we could get was 825,000 shares. So we're back at some level of support. And again, not many of these stocks in the semiconductors are doing it, but even Cirrus Logic, pretty good one. February 6th, you had a slam down at 39.51 with 7.5 million shares. Yesterday, 1.28 million shares. Even if it comes down on basically the same volume and you get 1/7 of the volume, you're going to get a bounce. Now, everybody might get sour and dour again in another week or so, but we're going to have a bounce for a while. And that bounce is going to tell us what we should expect probably through the end of April. And I just don't want to get everybody excited to think that it's a one-way trip straight down. Even in a bear market, you can have significant moves for a significant amount of time to the upside, which is what I'm planning now. In the meantime, sell when you can, not when you have to. We will see you Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.